International business consultant and the founder of Ubuntu World Consulting. She comes from Romania. Her global experience in business and policy frameworks will provide us valuable insights into promoting inclusive growth. Moving on, Kyle Inan. He's the CEO of KI Asset Management Company from Turkey. With extensive experience in asset management and investment strategies, he offers a unique perspective on aligning financial practices and inclusive growth objectives. He's also a geopolitical analyst, and in his free time, he also performs. And he might have a surprise for us actually tonight. I invite you all to come and witness that spectacle. Mr. Masroor Arifin, he's the Managing Director of Citibank Bangladesh, a pioneer in leveraging technology for banking services. His practical experience in digital financial inclusion is highly relevant to our topic. And finally, Mr. Ghulam Mohammed Algomir. He's the chairman of Max Group, and Professor Karori Singh. He's the former director and emeritus fellow at the South Asia Studies Center, University of Rajasthan, India, a renowned scholar. His deep understanding of socio-cultural factors and economic development will definitely enrich our discussion. And finally, last but not least, engineer Ghulam Mohammed Algomir. He's the chairman of Max Group and vice chairman of Bengal Commercial Bank, Bangladesh. He has extensive experience in industrial development and banking and brings a unique perspective on the intersection of infrastructure, finance, and inclusive growth. We gather here at a time when the global economic landscape is marked by profound disparities. The gap between the rich and the poor continues to widen, posing significant challenges to poverty reduction efforts and exposing vulnerabilities within our financial systems. In many parts of the world, economic growth has not translated into equitable prosperity, leaving large segments of the population marginalized. Our session today centers on the critical role that resilient banking systems and inclusive growth strategies play in addressing these challenges. Resilient banking refers to financial systems that are robust, adaptable, and capable of withstanding economic shocks while continuing to serve all segments of society. Inclusive growth emphasizes economic expansion that benefits every layer of society, and especially the underprivileged. We have identified 5 interconnected themes to guide our discussion during this session. The first one is technological innovation and digital financial inclusion. We'll be talking about mobile banking, digital wallets, and fintech innovations, and how they're bringing banking services to the remote and underserved areas. In Bangladesh, for example, we have a good example. Platforms like bKash have transformed access to financial services, enabling millions to participate in the formal economy. However, this digital revolution presents challenges, ensuring that all segments of society, including those in rural and impoverished areas, is essential to prevent further widening of the digital divide. We also have, on the other hand, cybersecurity risks that can undermine trust and stability in the financial systems. Furthermore, the regulatory frameworks must adapt swiftly to keep pace with technological advancements. Our second policy theme is policy framework and regulatory environments. Effective policies and regulations are the backbone of a resilient system, and governments play a pivotal role in creating environments that encourage financial inclusion while safeguarding consumer interests. Initiatives like India's, and I hope I don't massacre the name, Pradhan Mantri Jan Dhan Yojana demonstrate how policy can expand financial access to millions, integrating the unbanked into the financial system. The challenge lies in fostering innovation without compromising security and stability. Our third theme is the role of microfinance and community banking. Microfinance institutions and community banks are instrumental in reaching the unbanked and underserved. By providing small loans and tailored financial services, they can empower individuals and foster entrepreneurship, fueling grassroots economic development. And Bangladesh is actually a very good example in that respect. And Bangladesh has demonstrated that microfinancing can have a very positive effect on economic development. Our fourth theme is sociocultural factors and financial literacy. And here we will touch upon cultural barriers such as mistrust of formal banking and restrictive gender norms, and enhancing financial literacy as an essential element to empower individuals to make informed decisions. Also, designing financial products that respect and align with local customs and values is crucial. Our fifth and final theme is resilience in the face of global economic challenges. And here we'll touch upon global shocks such as economic crises, pandemics, and climate change, and how they affect and how important it is to build robust banking systems as crucial to promote long-term stability and growth. These themes are deeply intertwined and will form the basis of our discussion today. We will start first with a question to Professor Karori Singh. And Professor, you have taught and described poverty as a social construct influenced by human institutions, policies, and cultural attitudes. Could you please elaborate on how this understanding changes the way we approach poverty eradication, and how can financial systems address both the structural and cultural aspects of to foster inclusion?
My interest in microfinance and financial sector component of poverty generated when one of my PhD students from Sri Lanka is on the faculty of Ruhuna University in Southern Province. When he was writing his PhD thesis, he studied three Southern Province districts in the context of three main agencies of microfinance. That is public sector agencies, cooperative, and private companies. And I have seen very interesting findings. But ultimately, he concluded that microfinance is one of the most important relief measures in helping the poor. But it is not so much successful in generating investable surpluses unless or until microfinance generates investable surplus. There cannot be sustainable poverty eradication. So apart from this microfinance, I have a general interest in poverty study and spend so much time in studying poverty. And during the course of my study, I discovered that we have highly inadequate understanding of poverty and inappropriate policies and strategies to eradicate it. And the poverty center's global discourse is still very weak. Whatever the poverty discourse we talk at the global level, that is the relief measures to the poor. And quite often we confuse the relief measures as poverty eradication. To helping the poor, we consider it as a measure of poverty eradication. Here we are committing some mistake, and the mistake is relief measure is not sustained poverty eradication. Because the global discourse is centered around five major themes. That is the financial architecture, global general financial architecture, inequality within the nations and between the nations, climate change and financing climate change. Fourth one is the conflicts within the state and interstate conflicts. And Fifth is the technological advancement and digitalization. But how the measures uh, around these five themes are pro-poor, that is the questionable things. So I am making a plea to bring back poverty in the center of global discourse. So when we discuss poverty at the intellectual level and at the practical level to eradicate it, we have three main perspectives. First, the primordial perspective, which has two components, the religion-based approaches and the natural condition-based approaches. And the second, modern perspective, which believes poverty as a social condition. There are two components, ideological approaches and the techno-academic approach. The third one is the blended perspective. And all these perspectives, when we try to study and understand the poverty, the policies and strategies are most inadequate. Then I have prepared certain slides, but which cannot be displayed due to paucity of time. So the nature of poverty is quite often we consider several components like lack of opportunity, lack of finances, deprivation, and so on. And we collectively call it poverty. But the aggregation of these components is not more than, less than the poverty. Because poverty is not merely aggregation of these components, but the sum of these components is altogether different in terms of poverty, because it has some psychological, intellectual, and human dignity components. And these human dignity components are somewhat ignored in the poverty studies and even in the microfinance activities. And for that matter, I think the chief advisor of the Bangladesh government, Muhammad Yunus, while speaking at the Baku conference 3 days back, gave his vision of a new civilization based on 3 zeros. And again, he repeated the same vision here this morning. I think that bears some significance. Because we should not be having a sort of hawkish presentation and the state interest-centric approach while we are talking poverty eradication and the microfinance. Our approach must be human-centric, humanitarian approach. And that approach is lacking, I think, in most of the poverty eradication programs. So in the overview, what should I say? Most of the countries are in the dilemma of essentialism of welfareism and instrumentality of capitalism. So most of the countries and the policy planners are trying to harmonize the two, the essentialism and the instrumentality. So the poverty eradication is being discussed and fiercely debated, but the problem is we are discussing and the political administrative elite is talking about poverty as a political rhetoric in a democratic process. The poverty eradication is a liability, obligation, and sometimes utility for the political administrative elite. It's not exactly the poverty eradication. For that, we must have some kind of humanitarian approach in terms of poverty. So the poverty, direct poverty eradication measures, what we call as poverty eradication, are just relief measures. So what had been the overall impact of all the governmental policies on poverty eradication and how the poor people are having self-confidence and they are having their dignity, that is still in the question. So, though the global community has abiding commitment towards SDGs, Sustainable Development Goals, but yet to develop collaborative institutional mechanism for direct poverty eradication, not merely relief measures in poorer countries. And here I must go for introspection. Our intellectual and academic community is less sensitized towards poor. It has been revealed by the Times Higher Education Report 2023. The research and publications on campuses are lowest on poverty. It's a 5-year survey in which the Times Higher Education Report had mentioned only 71,000 publications. Whereas in regard to other sustainable goals, like the SDG third, that is health and well-being, there are 21 lakh publications. So the poverty eradication must be broad-based on the campuses. Though we are talking poverty eradication, we are debating, everything is going on. But when we come to the evidence, I think that it's not the encouraging picture. Though the poverty eradication is the first goal among the 17 SDGs, but in terms of the research and study, it's the last one out of the 17 goals. And moreover, the impact of various the various strategies like the foreign investment. Quite often governments are having foreign direct investment policies and mobilizing the investment. But the evidence reveals that the association is positive over the long run. But there is no causal relationship between trade and poverty eradication. The globalization and poverty eradication have a long-term convergence. In the short term, there is no convergence. The tourism, which includes travel, hospitality, consumption, and accommodation, tourism has a diversified results and evidence about in terms of poverty eradication. Microfinance, of course, is failing in generating surplus, investable surplus, and on digitalization, there is no substantial study about how it is providing relief to the poor. Rather, it is creating the digital divide and new kind of inequality in different societies. So,
Mr. Singh.
there is a need for global cooperation and collaboration for sustained poverty eradication, and for which I think both the academic elites and the politico-bureaucratic elites must take a lead. Thank you very much, Chairman.
Thank you. Please don't exhaust all your speaking points. We'll come back to you. We have a few more questions for you. Moving on, we'll start with the only lady at our panel. Ana Maria, your company specializes in expanding operations in industries like green energy and the circular economy. How do you see resilient banking systems supporting businesses in these sectors to promote sustainable, inclusive growth?
Good afternoon, ladies and gentlemen. It's both privilege and responsibility to be here today and address this most critical challenge challenge of our humanity. Humanity wonder the gap between the poor and the rich. I can give practical example because I'm a business consultant. So in Europe, we start like 4 or 5 years ago with the banking system, offering with the government offering loans for green energy, renewable and wind energy. The government supports a lot this part, beside the green climate change, circular economy, especially recycling plants. And I was thinking to Bangladesh because you have the garments here. What a great idea to launch business in this area because it's the future and you can be the pilot project for the world, let's say, in the recycling garments, even those that are the most polluted garment in this area. So regarding the banking system, they offering a lot of loans, you know, in parallel with the government. Let's say the government launch a program to offering a program for green energy that we had this year. And once the company can be a startup, let's say, not only the small, medium companies or the big corporation. Here we speak about startups. So somebody that has a plot and wants to put solar panels can have a loan from the government, and once the loan is approved, you open a line loan from the bank. So you can have also the loan from the government and also plus from the banking system. So this is more security. You can get this. And this is very important money, let's say, and help a lot. Romania is becoming one of the first European countries in solar panels. But this is all about regulations. So we follow the European regulations. So like always say, every nation, I don't know, in Bangladesh, the government should really have collaboration with stakeholders, private stakeholders in green energy, and create a plan strategic how we can tackle green energy, climate change in Bangladesh. This is the way to have a formal plan for the future, and also to come the banks and others, let's say university, because play a very important role. Like I was speaking in the breakfast with some students from Dhaka University, and I was sharing my expertise in Romania. I think the university and to tackle the poverty is on the school, on the communities, on the mayor should be going more and more to the rural area and explain, because they are very close to the nature. They understand maybe better than a business person how to tackle the climate change. Really, I believe this I would, even you don't have really education. I think I'm coming from the rural area, and even if I didn't have the education, I will understand better, let's say, how to protect the nature, how to grow farms, vegetable, and so on. So in my opinion, this is what I have to say for the
The
moment.
importance of policy making combined with the intellect of the academia, but
Yes.
also the grassroots initiatives.
Yes, because all three, governments, university, banks, and less fortunate people can tackle together. It just make an incubator or a cluster, or I don't say a cooperative.
Thank you.
But they have to share, because the government should learn also, because they change all of 4 or 5 years. So I have to tackle. Yeah.
Thank you for that unique perspective. Coming back to Bangladesh, and I'll address Mr. Arifin. How is Citibank utilizing the technological innovations to enhance financial inclusion in Bangladesh, particularly for the unbanked and the underbanked populations? I think you have to turn it on. Yeah.
It's working? Yeah, no, thank you everyone. My co-panelists, thank you for being here in Bangladesh. Alamgir Bhai is only another Bangladeshi person on the stage. I represent the banking sector here in this talk today. With regard to the unbanked population, yeah, we have huge number of unbanked population, no doubt. You know, like say in Citibank itself, the bank that I lead, there are only 3 million active customers, whereas the population of the country is 180 million or so. So that tells you clearly, how much of financial inclusion we could successfully do so far. Different banks are running different programs. The results are yet to be seen. But the thing is that, in the meantime, the MFS, Mobile Financial Services Revolution, has happened in this country. It's the country of bKash alongside M-Pesa Kenya. This is the largest mobile financial services company on earth. Now, Citibank, we have recently partnered with bKash. Recently meaning 3 years ago, for the first digital nano loan in Bangladesh, based on the model that I myself learned along with the bKash CEO in Tanzania and Kenya and Zanzibar of Africa. So interestingly, there I saw firsthand in banks like Equity Bank and other places that banks' total lending books 30% comprises of digital nano loan, micro small ticket loans of around 10 to 15 days cycle. But in Bangladesh, we are way behind in terms of launching it. This is the first digital nano loan bKash and Citibank together have launched. Is the bKash's database, MFS customer database, and our Citibank's capital and credit risk is going on fine. So far there we have touched the lives of exactly 2 million people. They have taken small sums of 20,000 BDT, 15,000 BDT.
What's the difference between being able to implement it in Africa and lagging in Bangladesh? Are there any particular reasons, underlying reasons?
Underlying reasons for
not being able, for lagging in implementing
no,
it in
it's
Bangladesh?
it's about the thing that you believe in. It's still in Bangladesh, though bKash has come, but it's all about transferring his money to my bKash account. It's a money transfer machine. Now you need to up the game. Basically, the financial inclusion in this country has traditionally been about collecting or acquiring deposits of the marginal people. It was never like, giving anything to them in terms of credit, other than the NGOs, those who are giving, but they're giving at the rate of 25% per annum. But the banks can afford to give it at around 9%. And if there is central banks programs of refinance and pre-finance, then it makes also even 9-10% interest rate very meaningful, because if I can get the fund as I'm getting for bKash Citibank digital nano loan at 1% from central bank, is still at 9%, I'm making 8%, which is okay. You don't need to be always, with this kind of programs, you cannot be too much P&L centric, profit and loss account centric. You have social responsibilities, and when the economy grows, and if you are helping the economy to grow, ultimate beneficiary is you. So, but the problem with in Africa and Bangladesh between these two, if you compare, is that it's been going on there for a long time. So they have already perfected it as an art. It's about trusting that customer group. That like bKash Citibank Nano Loan, I don't know even one of these 2 million customers, because they are all on your mobile app of bKash. You go inside, and after 3-4 screens, it prompts like, that do you need a loan from Citibank? So these are bKash customers, and they are from far off places. They are not really urban people. They are like from different parts of the country, where a typical commercial bank, due to its profit and loss account related concerns, will not go and open branches. So I meant to say that to come back to the question, one day, Bangladesh will graduate from this restrictive and very much self-centric thinking about financial inclusion, where you are basically wanting to attract deposit of the entire population's marginal group or low income group. But this is not fair. You need to give back. You need to give them access to credit. But what we are all doing is we are trying to only take the deposits, and we are trying to enjoy the float that they will offer us, and we would keep on lending to big corporates, and we will keep on opening LCs for big capital machineries and all that. So it's a mindset. the mindset is changing because, say, for example, now the biggest MFS company and country is one of the best known banks, where IFC World Bank is the single largest shareholder in Citibank, and it's a very reputed bank in the country. Anyone can vouch for its brand name. The thing is, this kind of partnerships will encourage others, and also the digital banking licenses have been issued recently. But overall, the scenario is pathetic. Pathetic, why I say that? Total reserve money, I'm sure you know the reserve money, the money printed. Printed money total is, 32.14 billion US dollar equivalent Bangladesh taka. Total printed money. Of that, mattress money is 23.62 billion US dollar. So out of 32 billion USD, 23 billion USD is the mattress money, meaning the money has been printed and those money are not coming back into the system. Mattress money is a symbolic way of saying that, money outside bank. Now you need to attract those people to actually come to the formal system. Now to do that, different programs must be launched, lending being one. Since you asked the question about that, so I answered that. But you need to also promote it's a habit building thing. You need to actually lure them into choosing a safer place, which are banks and other MFS companies. So it can go on and on. Overall, I would like to say that incentivization is very important. Overall, I would also like to say that central bank's programs are very important. Central bank can eradicate a lot of legal hurdles and impediments in terms of when an MFS company bring a deposit of far off places of very marginal people, they have a different KYC requirement, whereas we banks have a different set of KYC. It's not helping. It's ultimately creating a system where banks are running after who already has money. Banks are running after middle class and upper segments, and as if the segments below middle class and up to the rickshawala people, the rickshaw pullers, is another symbolic representation of the lower income group, as if they need to be taken care of only by the NGOs. So this is another mindset whereby banks and NGO related the Chinese wall must break, and banks and NGOs must collaborate. Banks and telcos also must collaborate. Telcos have big data, and we deal with only basically urban people. But also in the banking sector, the microfinance is getting popular because rate advantage is there for those beneficiaries, because NGOs are charging 25 to 30%, whereas we banks are charging 9 to 10%. So this is an advantage, we must give back to the society, we must give back, and ultimately we will be benefited if we can say like Citibank can become a bank from 33 million people to a bank of 30 or say 40 million people, which is our dream, and we are seriously chasing it. We are now Citibank's biggest project that is going on is not the CityTouch app-based internet banking that we have, but also we are going to launch a neo bank very soon, a bank within Citibank. So it's a core focus area of the bank. I think the number one focus area, which is confidential, but I just felt like saying it. Soon, within a year, you will see a neo Citibank, which is just in the model of Brazil's Nubank and the Equity Bank of Kenya, Tanzania. So we are coming up with that to actually break all these barriers.
Thank you. You raised some very interesting points and questions that we'll come back to. But since you've made some very interesting observations on the Bangladeshi market, I would like to ask Mr. Algomir, Engineer Algomir, as the as the Vice Chairman of the Bengal Commercial Bank. The bank itself also aims to provide specialized banking services to micro and small enterprises across Bangladesh. Could you perhaps also share with us some of the strategies that the bank employs to reach the underserved populations and support inclusive economic growth?
Thank you, Mr. Faris. Good afternoon, ladies and gentlemen. When I am speaking in front of you, I think I have got some advantage because in the same panel we have professors, we have consultants for the banking sector, we have bank MD. So my responsibility of talking actual banking system and this resilience is, I will not touch. But I will say, as a businessman and as a partly owner of a bank, I can say how it should move and how it is moving specifically in our country. I mean, we know that if you want to destroy a country, you have to destroy its education system, destroy the judiciary, destroy the financial sector, and that is, our bank is the heart in there. So this banking system is the main driving force for the business people and the economy of the country. And this is being controlled by a controlling bank called Bangladesh Bank in our country. In last 53 years, we have done pretty good. And we have a lot of banks to serve the people and the business people. But still we need more banks and more extended hand to reach to the poor people and the people who cannot reach to the bank without collateral. So there must be some system where people cannot go to bank, but you go to the bank, you go to them and extend your help and money with money to borrow the money from you and pay back in time. I remember when I started business before 45 years, we used to go maybe 30, 40, 50 times to get a small loan. But nowadays, in our country, bankers are coming to us to take loan. It's not me only, any businessman, any good businessman who is a good performer, who has proven as a good banker, good businessman and trustworthy, money was not a problem in this country from the bank side. So that is the advantage and good thing we have done in last 53 years. But I thought it could be far better and we still have time to improve that. I will say to improve further and further, the first thought has to come from the government itself. Government has to think that I will not dictate banking sector, meaning he will not dictate the finance minister or the Bangladesh Bank governor to dictate the banks. Individual banks, these are called private banks. They should run their own banking system, which is a business for the investors and the shareholders. That should run very, very independently without interference by others. And as a owner of the bank, I can say against me also that the shareholders should not interfere the day-to-day running of the bank, and that bank should be handed over to the management of the bank, like managing director and his team, full team. And that is how the bank will run properly and the skillness of the bank officers and the bank management will grow. But as a owner, if we dictate the management to give some loan to somebody who does not fulfill the criteria of the banking norms and guideline of the Bangladesh Bank or the bank own guidelines, if we force them to give the loan, then those are the areas where it becomes a crisis and for that bank and for that country. And in recent years, we have seen those things happened a lot. And we have learned a lot how to stop that in future. And I hope with the change of the situation, those things will be taken care of. Power should be given to the managers of the bank and bank management. They should run the bank, and when they have problem, they will come to the board to talk to the directors and take the big decisions. Now, when we are dictating, the skillness of the bankers is not being developed. And in other words, we are stopping our bank officers to grow themselves and exercise their knowledge and power, and they are being frustrated sometimes. And this was the result. We know, we do gossip, what happened in our country in some banks, few banks. So, another thing I would like to mention, the so-called
I'm sorry.
Islamic bank. Yes,
Can
sir.
I interrupt you here? Can we just get another perspective, and we'll have another round of questions. Just another international perspective also from our colleague Kyle. If you could draw your conclusions.
Okay, the conclusion is, in the last 53 years, we have progressed in our banking sector quite well. And instead of ourselves as a borrower to go to bank repeatedly, now bankers are coming to us repeatedly to take loans. So it has grown. But I am saying we could grow faster, and we will grow faster in coming years. Thank you.
Thank you for sharing your insights. Kyle, we've heard, we've identified the importance of resilient banking systems to protect the most vulnerable. How do asset management firms like yours contribute to building these systems, especially in economies that are struggling with rising national debt?
Okay. Thank you so much, first, and thank you for the generous introduction. First and foremost, also allow me to express how privileged and honored I feel to be here today at the Bay of Bengal conversation with the brightest of minds here. Thank you so much. It is really important to discuss a topic that actually lies at the heart of our global economic future here, resilient banking system. But to understand resilient banking systems, we need to understand what national debt is. If we don't know what national debt is, there's no point in understanding what resilient banking system is. So, as we speak, many nations, rich and poor alike, are grappling with the rising burden of public debt, which continues to actually grow at an alarming rate. And I'll provide examples to this, so let me see if I can make this more vivid here. And while debt itself isn't inherently bad, the way it is managed and distributed across economies either fuels or hinders the economic progress. So we base everything on inclusive growth and economic resilience based on how we manage our debt. So we are living in a world that is extremely interconnected, owing to technology, and simultaneously that is increasingly both economically and socially divided. So the rich continue to amass greater wealth while the poorest remain mired in poverty, unfortunately. The gap between the two has never been wider. And unfortunately, this gap makes our financial systems even more vulnerable than ever. So around the world right now, the national debt has reached record levels. According to the IMF, and I'll give you 2023 stats here, the global national debt has reached $100 trillion, which actually is an insurmountable number, because then the debt goes into a self-perpetuating cycle of interest, adding interest, and compounding interest, and there's no way to solve this. So the idea, plus the debt to GDP ratios, which actually destroy people's PPP, purchasing power parities, and then these are dangerously high levels for the global economy. Now, unfortunately, these aren't just figures on a page, numbers on a page, but they represent the financial health of entire nations. And for millions of people, they represent, obviously, an uncertain future. So what is driving this debt? First and foremost, allow me to retrospectively go back to 2008, where we had the two mortgage lenders here, Fannie Mae and Freddie Mac. They provided subprime mortgage loans to a point where, they couldn't recollect those loans, and they almost spelled the doom for our entire financial system as the world as we know it. But then the government stepped in and tried to bail out all those financial institutions by providing $20 billion to $30 billion loans. But then again, that creates another perpetual cycle, because that goes into trickle-down economics, because the lion's share actually goes to the major shareholders and CEOs and top leadership, and the people who are marginalized or socially alienated, who are socially alienated from meaningful participation, get nothing but crumbs. So I don't think that's a possible system that can work. Another major factor that is driving this, that as we mentioned in the previous panels, war and conflict, ongoing war and conflict actually contribute a lot, like military spending and other major things contribute to national debts. So what happens is the more national debt a country has, the less it can offer to its citizens. So it becomes, again, a self-replicated perpetual cycle. Plus, you have inefficient governance, meaning poor fiscal policies, lack of financial accountability, and that actually exacerbates many of the debt levels in many countries. And previously it was also mentioned, we have the climate change, extreme weather events are also adding to this phenomenon, unfortunately. So I'm going to keep my time short and sweet. So true risk actually lies in the distribution of debt and its impact on the most vulnerable populations. So we need to really need to move forward with an inclusive growth agenda and try to address these problems as soon as possible. Thank you.
Ana Maria, coming back to you, you've made some very interesting points earlier. You worked extensively with European funds.
Yes, exactly.
And state aid programs.
Yes.
How can you tell us how can such financial mechanisms be optimized to ensure that the benefits of economic growth reach the marginalized communities, especially in industries like green energy?
Okay. So regarding European Union funds covering absolutely all the sector, even the social sectors, I never worked for the social, more from green energy and industry, manufacturing. So in general, European Union offer funds, not really very big important funds, but still to run as a company. In general, you should have already a company and already have a profit and a good balance to participate and have this kind of funds. So in general, the European funds are not really for startups. The startups are more from the government side. So I believe in Bangladesh, this kind of solution will be great because look, we entered European Union in 2007 and our country grew very rapidly since the last 10 years and also with the foreign direct investment. So this coupled with foreign direct investments, European funds, but European funds help a lot to the small, medium companies to grow because the big corporation already, they are in the country because of the taxes and so on. So yeah, I believe that this kind of programs like, not really like European funds, but a little bit targeted how it's in Bangladesh country, which are their primary sectors. Because I know you have agriculture, the rice. Here, maybe you have less fortunate people in this area of sector, and here to invest more and give more loans. If there is not, if the government don't have possibility to offer money, you can extend to international collaboration, like UNED-PD. I know that they are doing a lot of projects in this area, maybe collaboration between this organization to raising funds. Because in Europe, beside European funds, these are the raising funds, like private companies, international organization, especially in this part of green energy, like embassies, also like PIBA, the Holland, also participate offering in Romania and in other countries funds for green energy. If I answer.
A combination of bilateral, multilateral financing mechanisms.
Yes.
Thank you. We're approaching the last 15 to 20 minutes of our session, and I'd like to also leave some time for our audience to ask questions. So moving on, I would like to ask our panelists to try to keep their answers as brief as possible. so we can have more time to go through more questions and also have some questions, entertain questions from the audience. Going back to Professor Singh, you've highlighted certain issues like foreign direct investment and microfinance and digitalization having various impacts on policy, on poverty eradication. Which sectors, in your opinion, should be prioritized in creating financial systems that balance resilience with inclusion, and why?
Whatever the nature of banking system, banks are not operating in a robotic manner. They are operating in a particular socio-cultural milieu. So the humanitarian consideration, the poverty eradication component must be on priority along with the financial service provider banking system. The second thing is important how banking systems should function, whether it should be in a cooperative manner, it should be a private profit generating company, it should be under the public sector, because in different sectors, different models, there are diverse results. So we must have to develop some kind of consensus which model can be better, and whether there must be some kind of hybrid model to address the humanitarian issues, the pressing issues of finance to the weaker and marginalized sections, so there can be a sustainable poverty eradication. Thank you.
Thank you, Professor. Mr. Arifin, how does the Citibank deal with issues such as digital wallets, cybersecurity, digital literacy, and also, are you exploring other means of reaching the underserved, such as implementing new technologies like blockchain, for example?
Too much of talk going on about blockchains. We are all experimenting with it. Now, artificial intelligence is another key word that we're chasing. All these are important because when you are dealing with mass population, as opposed to what you do now, banking only for elites and middle class and upper section, as I said earlier, there is a core difference. And there, basically now, if you want to do banking for unbanked population, when I said that in this country, it's a pity that total printed money is $32 billion equivalent BDT, whereas mattress money is $24 billion, meaning out of $32 billion we printed, $24 billion is now under the pillow in the cash form. They are not coming back to the system. Meaning people, in general, when you talk about people with P capital, they're rejecting the banking that we are doing. They're not coming back to the system. They are taking the full help of MFS for money transfers. But MFSs are also interesting. They are basically courier companies. They are not giving loans. They are not licensed to give loans. And when you do not give loans to the marginal people and you only use them to, basically suck up the deposits that they have at their homes and under their pillows and mattresses, I don't like that kind of a system. And in that kind of a system, when you want to graduate from system A to system B, a more equitable banking system, then the blockchain talk, kinds of falls flat on its face. It sounds very laughable because you're not doing the basic. You're not doing the basic. Basic is with your mindset. You are believing that, poor people should go to NGOs and only middle class and upper people should come to the banks. Now, I think more importantly than blockchain is to believe in data. You have data, you have telco data, telephone operator companies data. You have other big, corporations data. And to mine those data, you need artificial intelligence to understand the needs and aspirations of those people. So now we are seriously working on machine learning, we are working on big data, and we are working on AI. As I said that, Citibank, CityTouch, digital banking, internet banking, it's only for the 3 million people that is already a Citibank customers, and it is country's largest and most popular internet banking app. This year transaction volume is going to be 1,20,000 crore BDT, which is 12 billion US dollar equivalent in Bangladesh Taka, just transacted on phone. But these are only for Citibank customers. The person who is in a far off place near to southern part of the country, lives in an island or near Sundarbans, they cannot use CityTouch because Citibank is obstructing them to come into CityTouch and basically telling them go to NGOs. Now the challenge is to break those barriers, as I said earlier, to open it, to open